Personal accounts or prop firms? That's the question that so many traders are asking themselves in 2025. And in this video, we're gonna unpack all of the pros and cons so I can help you decide what is best for you. Now, for the information I'm going to be breaking down for you here, guys, I want you to understand this is primarily for those who are trading CFDs and or futures. There are many other trading styles, such as people who invest in cryptos, people who invest long-term in things like stocks, and those who even trade something like options. So primarily for my trading style and approach, being someone that trades NAS 100, aka NQ, depending again if you're trading CFDs or futures, we're going to be focused on the prop firm space and also personal accounts, so you can really get the true numbers of what you can expect as far as your performance, your returns, and what's a realistic income that people can make from the space. So especially for my new, beginners in the industry, a lot of you get very caught up in just the excitement of placing your trades, starting to see your account go up, maybe passing your stage one of a prop firm. But I think it's super important whenever you get into any industry, you need to assess what is realistic for me to achieve. What are the highs and lows? What can I expect to get done? Because the reality is, if you don't get to know the numbers of the business, of the industry that you're in, you'll really have a lot of fantasies and dreams about what type of income you can make without having a solid concrete plan that actually takes you there. So I want to show you what it's like to evaluate someone's performance, both on a personal account and on a prop firm, so you can see the difference in what type of returns that person can generate. But before we get into that, I want to give a quick shout out to the sponsors of this video, TradexMastery and Trident Markets, for being our official partners for both the personal account brokerage space and also the prop firm space. Starting off with Trident Markets, we officially have a 100% bonus deposit promotion going on right now, where you guys again can deposit into Trident Markets and receive a 100% bonus of your deposit from the range of $200 all the way up to $10,000, meaning you can start off your first personal account with Trident Markets of $200 and they will match you with another $200 for your deposit. Same thing goes all the way up to 10,000 US. You can deposit 10,000 US and get matched 10,000 into your deposit. This is only good for the month of February, so make sure that you guys take advantage of this crazy promo and start your personal account journey today. And it doesn't end there. Again, shout out to TradexMastery for also sponsoring this video. And right now, for the next 4 days, from February 24th to the 28th, we are gonna have 50% off all funded accounts using promo code FLASH50. So again, if you are going to go ahead and get started with a TradeX funded challenge account, secure it in the next couple of days, as you'll be able to get half off your challenge. Check out all of these testimonials that we can see from the private mentorship here in Akashex and what they've been able to do leveraging our system with our branded partners to help them earn in the markets. Now, I want us to take a look very closely at two different scenarios of a trader operating on a personal account and a trader operating on a funded challenge account. Now, in this example, I really want to show you how far $1,000 can take you in the markets when you're trading, when we look at a personal account versus a funded account. And we're gonna go ahead and keep the exact same performance metrics. As you can see on the left, we got personal account. On the right, we got funded account. We're gonna have a balance on the personal account of $1,000. Now, for the funded challenge account, $1,000 typically gets you about a $200,000 funded challenge. That is especially the case with something like TradexMastery, again, the sponsor of this video. That's just including the full price of what it usually costs for a 200K account. Many times there are promos where you're going to be able to get those accounts for less than $1,000, usually about $500-600 bucks, which is crazy. But for this example, we're going to go ahead and keep it at $1,000. And then what that $1,000 would do if you were to use that to purchase a funded challenge account. Now, we're going to go ahead on the personal account and risk a 10% per trade. Do I recommend that you risk 10% per trade? Typically, no. Not with a personal account, unless we're trying to be ultra aggressive. Now, the reason why I wanted to compare the two accounts with a risk of 10% on the personal and a 1% on the funded is because you have to understand something. When you have your funded challenge account, you are prompted to pass phase 1. If you use different prop firms, if it's futures, there may be different rules, but the standard in the industry is that a phase 1 is going to be a 10% gain on the account in order to pass phase 1. Meaning, if we risk 1% per trade, you basically would lose the challenge if you lose 10 trades in a row. With that same math and same logic, it is the same thing as saying we're gonna risk 10% of $1,000 account. Why, Rich? Well, if we risk 10% of $1,000 per trade, that is $100. If we lose 10 trades in a row, that $1,000 is now gone. With a funded challenge, if we breach the max daily drawdown of 10% total drawdown, we're going to lose that $1,000 investment that we spent on that 200K funded challenge account. So in regards to the performance, we're keeping the risk ideally the same. 10% on personal, 1% on funded. If we lose 10 trades in a row, we both lose our $1,000 investment. Now we're gonna look at risk to reward ratio. Every trading system, every strategy, every trader may have some variety to this. Some people like closing 1-to-1 risk to reward ratio. Some people like to have a higher risk to reward ratio system. For this example, we're gonna do a 2-to-1 risk to reward ratio. So we're not gonna do, some very ideal, scenarios of 3-to-1, 4-to-1, 10-to-1. We're gonna keep it at a 2-to-1, pretty conservative approach when it comes to the ratios. Now, we're also going to keep the win rate at a pretty solid win rate of 70%. Again, these are just examples. We're gonna have a lot of different scenarios where we may have a higher risk to reward ratio or a little bit lower of a risk to reward ratio. Scenarios where you're winning 70% of your trades, maybe you're winning 50% of your trades. But again, we're just doing, a comparison of the exact same metrics, exact same performance, really just measuring if we can do the exact same things. How far can $1,000 take me on a personal versus a funded? So we're gonna look at a sample size of 90 days of trading. And we're gonna go ahead and keep it at 30 trades total. So meaning we're averaging about 10 trades per month. Now we can see maybe month 1 we take 15 trades, month 2 we take 10, month 3 we take 5. However you wanna slice it, we're gonna again do it in averages. 10 trades per month, 30 trades total after a 90-day evaluation. And we're gonna go ahead and look at the $1,000 account. If we risk 10%, it means that if we lose, we're going to lose $100. And when we win a trade with a 2-to-1 risk to reward ratio, it means that we are risking 100 to make 200. So when we win a trade, we're winning 200. When we lose a trade, we lose 100. So if we look at month 1 and we take a total of 10 trades, and we have a 70% win rate, it means that 7 trades win, and at a 2-to-1 risk to reward ratio, risking 100, it means that we're winning 200 per trade, and we have 7 wins for the month. That's what gets us that number of $1,400 profit. Now we're gonna take into account the 3 losses, which are at $100 each, which is 10% of the $1,000. Meaning that we're going to lose 30% or $300. And when we combine the wins and the losses, we have a total net of about $1,100, aka 110% gain. We're taking that 1,000 now to 2,100. And again, we're gonna keep it very consistent and easy to follow along. But if we mirror those same exact results for 3 months straight, keeping a 2-to-1 risk to reward ratio, keeping a 70% win rate with that $1,000 balance, at the end of that 90 days, we're gonna see a total profit of about $3,300. Looking at a funded challenge account, we're gonna see that we have a balance of 200,000 because we made that $1,000 investment to acquire the 200K challenge account. We're gonna keep the risk to reward at a 2-to-1, and we're gonna risk 1% per trade, which is the equivalent of matching a 10% risk on a personal account. If we lose 10% total in drawdown on this prop firm challenge, we're going to lose the account, therefore losing the $1,000 investment. We take 30 trades total, 10 a month. We have a winning rate of 70%. So with month 1, we're gonna see that we have 7 wins. Each 1% of that 200K account is going to be $2,000. So if we have a 2-to-1 risk to reward, that means that when we win $4,000 per trade. And when we lose $2,000 per trade. So if we have 7 wins, that's going to be $4,000 times 7 wins, which is a total of $28,000. With the 3 losses incorporated at 2K each, that's a total loss of $6,000, making it a net total of plus $22,000. And that means that we officially passed phase 1 of the challenge. Phase 1 of the challenge typically is going to be that you need to grow the account by 10%, meaning we would have to make a total of $20,000 profit in order to pass phase 1 of the challenge. So compared to the personal account, in month 1, we made $1,100 on the personal account. On the funded challenge, we made 0. We made 0 because we are simply still going through the process of getting the funded challenge passed. So month 1, you didn't make any money. Right now, that personal account is obviously a better scenario for that short term because we needed to pass a challenge. We couldn't touch actual capital yet. On the personal account, it's your own funds. You can go ahead and withdraw that right then and there at the end of the 30 days, for example. Now heading into month 2, same exact process. We're gonna go ahead and trade the same style, and we'll actually finish the month pretty early. We're only looking to make 5% in order to pass phase 2, which is a total of $10,000. So after a few wins, we didn't even really have to take the whole 10 trades for the month. You will pass that phase 2, and I'm going to assume that we're just gonna go and take the whole rest of the month off. You know, with these 7 wins, 3 losses, depending in the order in which they came, we may have taken 3 losses in a row and then 7 wins in a row, right? But the minute that we hit that 10K mark and we pass that 5% for phase 2, that account is now finished and we will await the credentials for the next actual funded account. So again, month 1, we basically used that to pass phase 1. Month 2, we've passed it probably a little bit ahead of schedule, but we're gonna go ahead and take the rest of the month off, take a break, kind of prepare ourselves mentally to now actually manage real capital. And so heading into month 3, we are still not making any money, right? And on month 2 on the personal side, at that point, we've already made $2,200 profit. So personal account, we've already made over 2K. On the funded account, we have made nothing after 60 days. Nothing yet. But heading into the last 30 days of this 90-day stretch. Month 3, again, we saw that on the personal side, we secured that last 1,100. We're sitting pretty at 3,300 profit after 90 days. On the funded account, this is where things get interesting. When you keep that same exact performance that got you past phase 1, phase 2, and now you're trading that funded challenge, we have the same exact thing happen, plus 28,000 in profit, minus the 6,000 in losses, is a total of $22,000 profit. After the 80%, which is the standard profit split amount, you're still looking at $17,600. So this is where capital and percentages, when you work with a higher amount, obviously is going to outpace, you know, option A. So versus $3,300 in pure profit from your personal account, you're talking about a payout that exceeds more than 5 times the amount. Now the difference is that we had to wait literally until that 90-day stretch to see the money, versus on the personal account, we were able to withdraw pretty much, let's say monthly, weekly, whatever the case was. Now, for the sake of time, we're not gonna give more examples of smaller funded challenges, but you can understand and you should be able to, if you're treating trading like a business, if you're taking this craft seriously, you really need to understand your numbers. You need to understand what is actually possible based on your metrics, based on your performance, how much money you can realistically squeeze out of personal and funded accounts. Again, whether you're trading a 10K account, which is a $100 personal account, are you trading a 25K funded challenge, where basically you're talking about a $300 personal account, you can see all the examples. I highly recommend you look at what does it cost me to go and get a funded challenge account, and if I didn't invest it into a funded account and I traded that money personally, what can I actually do with the same funds? So ultimately, you have to decide what route you feel is best for you. But when it comes to the math and when it comes to how much money you can actually generate for yourself, it's no surprise that when you have the leverage of accessing a lot more capital, you're going to have the road be a lot simpler, a lot easier and more achievable. So in reality, I think that if you're not touching a 5-figure or 6-figure personal fund account, then you're probably gonna be much behind in as far as pacing compared to somebody who does have access to, you know, max funding through a prop firm. So I always typically tell people the goal of trading, in my opinion, if we want to scale our capital, is we can leverage prop firms or other income streams that we may have outside of trading to ultimately just trade a very sizable personal account. Now, with that said, I want to go over some pros and cons of the two. So we saw the metrics and the performance, but at the end of the day, funded accounts aren't easy, right? Funded accounts do come with rules, stipulations, things that you have to be in line with in order to actually manage that capital. So let's take a look at some pros and cons outside of the actual potential of money and the realistic things that take place when you're trading a personal account, such as, you know, the speed and the accessibility of withdrawals compared to all of the rules and technicalities that come with funded challenges. When it comes to your personal accounts, you're gonna be able to deposit and withdraw usually a lot more frequently and a lot easier than doing it through a prop firm. All right, you gotta realize that with a broker, you're not requesting withdrawals sometimes weekly or monthly. You can really request them daily at that point. Versus a prop firm, a lot of prop firms, you have to wait for either a monthly evaluation and payout. Sometimes it's weekly, some are daily. But again, compared to a broker, traditionally, there are more wait times when it comes to getting your payouts on a funded versus a personal account. Now, when it comes to the difficulty of trading a personal account versus a prop firm account, it's not really that trading a prop firm is more difficult. It just comes down to understanding what the prop firm requires you to do to get funded in the first place. That is really the hardest part and the biggest obstacle for 95% plus traders. The reason why it's difficult is because if you really evaluate the way we were giving examples earlier of a personal account risking 10% being the equivalent of risking 1% on the funded challenge, that really means, if you think about it, making a 10% gain on a prop firm account is kind of like doubling your personal account. The reason why is because if on a funded challenge you need to make 10%, but you're given 10% overall drawdown, basically you have a wiggle room not of the full balance of the account, but really that 10% before you lose the investment and have to start over from scratch. It's the same thing as losing your $1,000 investment, like in the example we gave earlier, having to fund an account from scratch and then doubling that account. It's the same thing to double a personal account risking 10% than it is to risk 1% and pass your challenges. When you actually have your funded challenge account, especially a higher balanced one like a 200K account, then you don't have to risk 1% per trade. You can dial back the risk to 0.25%, 0.1%, whatever the case may be that you feel comfortable with, because the hardest part is getting funded, but then also staying funded, right? Because the way that we passed the evaluation, the way that we passed the phase 2 is probably not the same way that you want to go about trading the personal account, at least if you want to keep it long term, right? Because it's very easy to go on a losing streak of 3 or 4 trades, and at 3 or 4% risk, you know, you're looking at being down, you know, almost your total violation, and you have to work your way to just get that back to then start making profit, right? So again, the biggest thing is just understanding that once you have your funded challenge, you probably need to be a little bit more conservative. But in the process of getting funded, you are technically high risk trading if you were to treat it the same way on a personal account. So the journey is not easy. A lot of people do fail challenges, and not just one. You're gonna fail probably a lot of challenges. But the purpose of the funded route, like I mentioned earlier, is that when you do get funded and you're able to get that first payout, what you're supposed to really do is make that money back from all the times you've failed challenges. Now, that takes a lot of stamina. It takes a lot of mental fortitude to be able to fail, start again, fail, start again, and then achieve your first payout. We've seen many people in the space that go through sometimes 9 funded challenges before they get their first payout. But when they get that first payout, that investment basically paid it off, and then you're in the profit zone. So ultimately, I think other than that is obviously the path that you have to do, you know, as far as following the rules. When you have the funded challenge accounts, there's going to be things that prevent traders from basically cheating or trying to game the system. which isn't right? It's not ethical. It's not fair to the prop firms for people to do that. And that's the big reason why there's so many rules in place. Now, some people will argue these rules are in place to just really hinder traders from being successful, making sure that they don't get a payout by any means. But here's the thing. There's rules like, hey, you can't trade during news, right? You have to wait 2 minutes before and 2 minutes after in order to close and open a new position. And you have to realize that during news, you're going to get crazy volatility. What happens during crazy volatility? Well, when it works in your favor, kind of in a way get lucky that price, shot into profit. But let's look at the flip side of that. What if you get unlucky and you have a really crazy candle go to your stop loss? You're going to experience something called slippage, and a lot of people get very upset when they experience slippage for the first time. Essentially, slippage, if you've never seen that before, is you'll have your stop loss set to lose, let's say 1% of your challenge capital, and the news candle spikes so aggressively that it just blows past your stop loss, and instead of losing 1%, you may lose 1.5%, 2%, maybe even 2.5%, something like that, right? It just really depends how bad the slippage is, but you're gonna have a more than your planned loss. Your stop loss is gonna get more than violated. And so of course, traders are gonna go, complain to the chats and the support team, and it just becomes a really big issue. And so if you really look at that, not just for your perspective, but 10 people, 100 people, 1,000 plus people doing the exact same thing, it just becomes a lot to deal with. So that's why there's things like you can't trade during news. Other things that you cannot do is hold trades over the weekend. Again, market closes, gaps up, you go through slippage. A lot can happen over the weekend, and we've seen that, especially trading NASDAQ, some pretty crazy gaps. So you must close positions on the weekends. Now, again, there are ways for you to pay in order to trade news, in order to, hold during the weekends. Again, there's other stipulations, and we're not just going to tailor this only to TradexMastery. There's a lot of other prop firms that have almost pretty much the same rules, maybe some different type of rules, but you're going to have to follow some type of guidelines that these prop firms give you, and you have to adhere to it. There's no choice. So ultimately, what I want to just let you know is you're really in a position where you have to choose, okay, if I have this capital here, and I'm really talking to the people that have smaller capital, which is the majority of people. If you're trading $100, maybe $1,000, really anything less than $10,000, you can trade that on a personal account, and you can even be ultra aggressive with it and take that capital pretty far with enough time. But it's gonna take a lot of aggressive positions. It's gonna take you going on a pretty crazy run as far as like win streak goes for you to really flip that account into meaningful money that's gonna help you elevate your lifestyle, save up for something important, whatever goals you may have with the money. It's gonna take you being ultra aggressive with small capital, which means you have a high risk of losing that capital the same way that you have of flipping that capital. So it's gonna be a lot harder to make money with little money, but you do have the freedom of not having to adhere to rules, not having to wait for payouts. That's the biggest thing. Now with the prop firm route, again, you do have to adhere to rules. You do have to be a little bit more patient with payouts. You do have to go through a journey to even get the capital. But if you don't have that much capital on hand to put into a personal account, as you can see, with enough persistence, it really is a route that can accelerate the rate at which you start touching profits that are meaningful to you. And I think it's really about diversifying, and that's a part of the 2025 plan that myself and Brent Badal and some of the educators within our private mentorship have given to our students and to our members, where we say, hey, look, you can take advantage of prop firms, get those payouts, and try to funnel that money into more personal funded accounts where you're able to then scale 5 figures into 6 figures into 7. Obviously, with many years, it's not going to be an overnight process. It is going to be a headache. This isn't an easy industry, guys, but there is a roadmap and there is a way to do it. It just requires you to have the right mindset, the right expectations, and ultimately you asking the question of, am I willing to go through the process and what it really takes in order to get to that goal or not? Well, that's a wrap for today's video. I hope you guys got massive value from this breakdown of choosing what is the right route for you as a trader, whether it's trading personal accounts, funded accounts, a little mix of both. Again, shout out to the sponsors of this video, Trident Markets and TradexMastery, for being able to create platforms for either or. Use the links in the description to take advantage of all the promos we have currently going on right now. But appreciate y'all for always watching, subscribing to the channel. If you haven't already, please make sure to like, comment, and sub to this channel as we close in on 2,000 subscribers. And as always, guys, let's run it up.